All right. So I sent out an email Saturday that talks about our projects, and I said I'm going to go over some examples of the projects since we already finished our lectures for module one. But I look at our schedule assignments and looks like you have a homework due tomorrow that is before the project. So I've changed my mind. I want to start with our sample homework questions. And then if we have some time left, we can start with the examples for the projects. And then we'll continue our projects on Wednesday so that help you to submit your projects on Thursday. That makes sense? So if we do projects today, then we will do homework questions on Wednesday. That will be after your homework is due. So let's start homework questions today. And then the file I'm going to use is the class note. The class note. And then if you have your laptop, you can take out your laptop, and then we will start from the third sheet, which is called sample homework. And then after the third sheet, we'll go back to notes and journal. And then actually this example is also will be helpful for projects, but we'll start with sample homework first. Okay, I think we've done learning objective, identify and classify business activities last time, right? I think we did it last time. And then we'll start with recall accounting information system accounting equation, which is a 04 question. Okay. Match the statement with what each reports. Help you to understand what each statement does. Okay. You can use iClicker to answer these questions. I will just give 30 seconds, just think it quickly, and then answer the question. By the way, some information about iClicker grading. If, say, you attend every class for like 3 absences for free, like I said at the beginning, if you attend the class regularly and then you answer questions regularly, you will have the 200 points for iClicker, attendance and participation. I do not do any deduction points if your answer to the question is wrong in the class, because if you answer the question wrong in class, it's not your fault. It's kind of my fault because I didn't make things clear. So I want you to make mistakes in the class, so I will know which contents I need to talk more about. So don't be afraid if you make mistakes. You also get points, as long as you participate. So I'm going to give you maybe like 30 seconds to answer a question. Be sure to, participate every question. And then if you answer it wrong, no big deal. We can talk about it more. Okay. So let me see. The first one. Additional information needed to better understand the financial statement. I will give you, so these are the choices, A, B, C, D, E. I'll give you 30 seconds and let me know, okay? I don't think we talk about this very in much detail, but you should probably be able to figure it out. Three seconds. Okay. It looks like most of you got it right. Actually, this is E. We didn't talk about too much detail in the class because this is not a statement. It's just a note to the financials. Sometimes in the note, you will mention, for example, we'll talk about depreciation later, and then some firms will switch their depreciation method from straight line to double speed or something like that. So you will need to clarify that in your financial statement, in the financial statement note. Do you have a question? Yeah? Do you have questions? No? Okay. Okay, second one, summary of all revenues minus all expenses during a period. I think this is more straightforward. So 30 seconds. Okay, let's see. Revenues minus expenses should be income statement. So most of you got it right, okay? The income statement, yep. What is that? Did you just do it? Because I just stopped. I just gave 30 seconds. Maybe time up. Try next time. Okay, so any questions? Okay, next one. Summary of cash collected and cash paid during a period. This is more straightforward, okay? 30 seconds. Yeah, I think everyone answered the question. The answer is C. Statement of cash flow. That's right. And then next one, changes that took place in the amount of owner's investment during a period. The owner's investment is actually shareholders' equity, right? So actually this question is asking what is the change of shareholders' equity. So 30 seconds or until everyone answers the question. Can you answer the question right now? Okay, good. That was probably a time up. Okay, let me see. The answer is statement of shareholders' equity. So it's B. The last one, assets, liabilities, and shareholders' equity of a company at a specific point in time. So 30 seconds. Okay. This is the first time the answer is unanimous to be the correct answer, which is D. Balance sheet. Okay. All right. Next one. Using the accounting equation to solve for missing amounts. If total assets equals 100,000 and total shareholders' equity equals 40,000, then total liability will be equal to. I will give 1 minute. $15 seconds. Okay. Those who answer the question got it right, but I wanna talk about it a little bit. So the accounting equation is assets equals to liabilities plus shareholders' equity. So if you know two of those, you can figure out the rest of them. So in this question, it says total asset equals to $100,000. And then shareholders' equity 40,000. And then what is the liability? So liability is then total assets minus shareholders' equity, which is $60,000. Okay. Questions? No. I think you have a similar question in your homework assignment. It may ask you the other way, maybe give you assets and give you liability and ask you shareholders' equity or something like that. But just write out this accounting equation and see how you can figure out one of those if you're given the other two. Okay. 60,000. Okay. Next, identify if an account is an asset, liability, or shareholders' equity account. We don't do iClicker this time, because this is simple. We just think about it together and then see if we can figure it out. Whether it's an asset, liability, and shareholders' equity. Remember, what is asset? Asset is something, what is that? Economic resource that you can use, right? If you buy a car, you can drive the car, you can fix the car. But if you finance the car, the ownership of the car is not completely yours. So asset is anything that you can use for your business. And then liability is what you owe, and shareholders' equity is your complete ownership. So first one, inventory. What is an inventory? Asset, liability, or shareholders' equity? Asset, correct. Inventory is an asset. If you look at the second sheet here, balance sheet, asset, you have cash, inventory, total current asset, equipment, net of accumulated depreciation. So inventory is asset. And then the second one, cost of goods sold. What is that? This is a little bit challenging, right? Yep.
Shareholders' equity.
Correct. Why?
Let's
see.
Not really it's not tangible. You're not holding it.
Yeah. Yeah. If you remember, I drew the chart like 2 times for the 2 classes, right? Anything on the income statement, and cost of goods sold is on the income statement, right? It's the biggest kind of expense. And then cost of goods sold is on income statement. And what is at the bottom of the income statement? Anyone knows? What do we need at the bottom of the income statement? It's net income, right? We want to know our profitability. And then net income will go to the other accounting equation for retained earnings, and the net income will increase the retained earnings, and it belongs to retained earnings, and retained earnings is shareholders' equity. So that's why everything on the income statement will go to shareholders' equity. Okay. So next one, interest expense. What is that? You just answer that on iClicker, because I really want to know. I give you 30 seconds. What is interest expense? A, B, or C? I just got one answer. 2.
It's asking for
Number.
Oh, I'm sorry. Again. Then you got 30 more seconds. All right, let's see. Most of you answered B, some A, and some C. Actually, the correct answer is C. Why is that? That's because interest expense is on the income statement, right? Do you remember? Interest expense is on income statement, and then anything happened on the income statement will go to retained earnings, and retained earnings will go to shareholders' equity. Do you remember? Remember? Why are you so quiet? Okay. Interest payable. This is simple, right? What is interest payable? Liability, correct. Liability, so this is B. Again, if in accounting, let me give you some shortcut. If you see something payable, it must be a what? Liability, correct. That's what you owe. And then if you see something receivable, then what is that? That is your assets. Okay. We'll do that later, but just keep in mind, it will make your life much easier if you remember this. Payable is liability, and then receivable is asset. And sometimes we have something called prepaid something, prepaid something is also your asset. For example, if you don't pay your car insurance by month, if you pay your car insurance 6 months in advance, and then they offer you a discount, for example, and then for example, if this month you pay car insurance for $600, but the $600 is not your expense for this month. It also covers the expense in the following month. And if you record on your balance sheet, this $600 is your asset. It's called prepaid insurance. Will be covered in the future period. So once you say prepaid something receivable, that is your asset, and then payable is your liability. Okay. The last one is simple. What is retained earnings? What is that? Shareholders' equity, right? So shareholders' equity. Let me draw the chart again. Balance sheet. This is your balance sheet, and on the left, this is your total assets, and here, this is your liability, and then shareholders' equity. I'll just use SE, okay? And then shareholders' equity. But under shareholders' equity, usually on the usual balance sheet, the balance sheet you may see in this module, just have two parts. I'll just skip comment. It's called stock and retained earnings. So retained earnings, shareholders' equity. Okay. So next one, analyze transactions. Let me see. This is to record, each transaction, and I think it will help you with the project as well. Okay, let's look at these transactions one by one and figure out what kind of change it can cause to all these accounts. Okay, so the first one is this company purchased 10 vases with $5 each. So what is happening here? What does the firm purchase the is it vases or vases? I think it's different between the source and north, but no matter what it is, I just say vases. Okay, so what does the firm purchase the vases for? It's very important, right? What does do they want to sell this to the customers or keep it for something, for some other use? They want to sell to the customers, right? So that makes a difference. What difference does it make? So, for example, if you want to purchase a laptop for class, then that is your asset. It's used for your own business. But if you purchase a laptop for playing games, then that's expense. Okay? So the firm purchased the vases because they want to sell the vases to the customers. So the vases are considered inventory. Okay? So the accounts that is impacted is, okay, we'll say inventory first, and then cash. Yes, sorry. So we choose inventory and then we choose cash. What is the impact on inventory? Increase or decrease? Increase, right? We get more vases instead of less. So that's a $50. And what about cash? Decrease, right? So we do a minus 50. In all your class notes and projects, if it's the negative sign, you just do a minus sign and then it will generate a parenthesis for you. And then everything with a parenthesis, that means a negative sign, okay? So the first transaction only impacts asset, does not impact liability or shareholders' equity. Second one, sold 6 vases at sales price of $8 each to customers for cash. And then last time I said if you do an inventory sale, there are 2 transactions. First, you record the sale revenue, and then the cash you collect from the sale. And the second is you record your cost of goods sold. You record the change in inventory. Okay. So the first one, if we talk about the sale itself. Okay. If we sell the vases $8 each to customers, and what do we get? We get cash, right? So here, what is the impact in cash? Increase or decrease? By how much? Increase by $48, correct. And then what happened to the other account? What is the other account we need to record for this? What? If we record cash, then the other thing, that will impact our income statement, right? Because we collect money from our customers, and that is our sales or our revenue, right? And revenue is on top of the income statement. And where do all the accounting items on the income statement go? Correct. Because the income statement will come to net income, and net income will impact retained earnings. Retained earnings is shareholders' equity. So everything happened on the income statement again will impact shareholders' equity. So shareholders' equity will do sales revenue, right? Sorry. This one. Shareholders' equity. Let me see if we can. Okay. You can just do a cut and paste here. I'm sorry, there's something wrong with it. Do you know how to do that? So click this cell and click cut, and then you click this cell that you want to paste, and you click paste, and then it will be there. Okay. And then what is the sign for this sales revenue? Is it increase or decrease? Increase or decrease? Yep. Increase, yes, correct. You sell more stuff, you collect more revenue, and this is an increase. And then now you look at the result of this transaction is a $48 increase in both your asset and your shareholders' equity. Does that make sense? Yeah. Okay, next one. Record the cost of the sale. Cost of the sale, and then what do? What part of your asset is impacted for this sale? Is your inventory staying the same? No. What changed? What changes on your inventory? How does your inventory change? Increase or decrease? Yes, decrease. So we do an inventory, and that's a decrease of how much? 6 vases. But how much? $30, right? Correct. $30. Does anyone know why it's $30? Because your vase, your cost is $5 each, right? And then you sold 6 of them. And the inventory is always recorded as historical cost. What happened in the past. So that means that is why your inventory is decreased by $30, okay? And then what about the other account? What would be impacted? Sales revenue is always related to cash, but inventory is always related to what? Cost of goods sold, right? Cost of goods sold. And then the amount is also minus 30. We don't say it's a decrease, but it's a minus sign. Do you know what I mean? Do you know why? We cannot say there's a decrease in cost of goods sold, but we need to use a minus sign. Do you know why? What is that? Correct. And if you look at income statement, sales revenue will minus cost of goods sold, right? And then if cost of goods sold increases, which is the same in this case. In this case, cost of goods sold increased by $30, but it will cause a decrease of $30 for shareholders' equity. Does it make sense? That is because there's a minus sign in front of cost of goods sold. Does it make sense to you? If cost of goods sold increased by $30, what happened to your net income? Decreased by $30 because cost of goods sold is a minus sign. That's your cost. And then if net income decreased by $30, your retained earnings will decrease by $30, and which causes shareholders' equity to be decreased by $30. So we record the account, but we use a minus sign here. We use the minus sign to show that there's a decrease of $30 for shareholders' equity. Make sense? Okay. So next one. Purchase land for $900 by paying $200 and owing for the rest. If you want to finish this one, you should probably look at the textbook on page 7. There's an example that stock market wanted to purchase a land for $100,000 and do a note payable from the bank for a certain amount and paid for the rest of that. So this one as well. Let's first look at asset itself. Anything increased or decreased for assets. So the first we need to consider, that's cash changed. That's cash change in this transaction. Yes, because they paid $200 and then we first say it's cash, and then it's a positive or negative sign here.